Hello everyone, in this video we are going to see about a share split, or we can call it as a stock split. So what is stock split, what is share split? Is uh, if the particular company share prices 80,000 or 1 lakh or more than 1 lakh or more than 10 lakh, whether a kind of retail investor can be able to invest in that particular firm. No, can't, because that particular retail investor won't have such large amount of money to invest in that particular company. For example, let me tell one company. Company is MRF, right? If you take MRF, the current price of MRF tires is like 1,30,000, 1,20,000. It's fluctuating in 1 lakh rupees. So whether the retail investor or a normal person can able to invest in a MRF share, right? So certain shares can be splitted into number of shares. The one share can be splitted into 10 or 20, maybe accordingly. So why the split is more effective? Let me tell. If the MRF tire is 80,000 rupees, 80,000 is not affordable by everyone to buy that particular share. But if it is 80,000, nearly 1% or 2% will buy that. If I am going to split that particular share into 10, then value will become 8,000 8,000 something. Fine, 80,000 will become 8,000 because it's divided by 10. So a share price is 8,000. Then possibly a kind of 10 to 20 persons can able to purchase that particular share for 8,000. Fine, 8,000. A kind of 20 to 30% will buy that particular kind of retail investor can able to buy that particular share. If it is 800, if I am splitting a share into 100, if it is 800 rupees, then nearly hundreds of people will able to purchase that particular share. If I am going to make that particular share into 1,000 as a split, my share price will be 80. My share price will be 80 rupees. So that thousands of people will buy that particular share. Thousands of people will buy that particular share. If I am splitting that particular share into 10,000, then particular share price will be 8. Particular share price will be 8. Then lakhs and lakhs of people will be investing in my company. So stock split plays a vital role because so share, as you all aware about it. So capital or share price, it's the same one. When the valuation, when the companies goes performing well or goes well, what they will be doing is they will be purchasing the particular share of that particular company, so that that particular capital of that particular company also keep on, it will increase. So the value of the firm increases, share price increases, as well as the following things will be increasing. So stock split is when the company divides the existing share of its stocks into multiple new share to boost the stock liquidity. That's the thing I have given the example. If it is a 80,000, 1 to 10% will buy that particular share. If it is 8,000, nearly 20 to 50% will buy that particular share. If it is 800, in hundreds they will buy. If it is 800, hundreds they will buy. If it is 80, thousands they will buy. Thousands of people they will be buying. If it is 8 rupees, lakhs of people will be buying that. Fine. So that's the difference. As I told before, MRF is like 1,30,000. It's now trading in both NSE BSE market, right? So whether how much people are affordable, the person who watching this video can tell, or you can imagine how much people will be investing that in that particular share. Can't. The maximum number can't. Very few numbers will be investing in that particular company because it's 1,30,000 or 1,20,000. Even the companies who is more than 15,000 itself, it's very big amount to invest in that particular firm. So everyone will be think twice or thrice before investing in that particular firm, because whether it's increasing or decreasing, the amount will be on higher volume compared to penny stocks or a kind of single digit stocks. Compared to that, uh, even a 1% or 2% of rise or fall, it matters most because of the value of the particular share is high. Fine. So yes, you all know about companies in share market. Like MRF is one of the reputed company because they won't uh, they are the market leader of that particular thing. They won't allow small players to enter into their market, and they are very very strong enough in that particular industry. Even though Apollo, Cello, and a lot of companies, tire companies are there, MRF is known for their quality, and they are maintaining their share price, and they are competing with their existing persons, and they are the market leaders. So this is all about the MRF tires, because I have told right MRF tires as an example. So you want to know about what is MRF tires and shares and so on. That's why I have explained about what is MRF tires companies and its quality and its demand. If you take high vehicles like both cars, four wheelers, eight wheelers, lorry, and other heavy vehicles, everyone will be you can able to see the tire name as MRF because of their quality and their technique, and they are technically very sound in that particular industry, and they are maximizing their profit out of it. Yes, so yes, let's come back to those share split. So I have given two example over here, and I have listed a few uh, companies in this slide, which gives it's a stock split. So 10, they have converted one share into 10 share into one. Likewise, they have converted. So that's a share split. Split is splitting up of the share. One share into 10, one share into 5, one share into 3. Splitting of share. One share into n number of shares. So yes, we'll see the example. If old face value is 1 and new face value is 10, if the share price is 80,000, 80,000 it's one share, right? So after that particular split date, what it will become is one share will become 10 share. Share price will become 8,000. Value of the firm or value will be same. The number of shares alone will increase. The number of shares alone will increase. If you take example 2, number of shares, the old face value is 10 and new face value is 2. The number of shares is 10. Number of share price is 100. So the thing is 1000 is the value. So if it is converted into 2 after the split date, the share price will become 500. So even a kind of split, merge, whatever you can do. The major thing is share split. So why this share split is doing, we are doing is to increase the retail investors as well as liquidity of the amount inside the firm. We are doing this. Yes, that's the main objective of this stock spread, because when you always keep your share price as low as the large number of retail investor will invest in your shares, so that you will be boosting your liquidity in your firm, as well as you can able to get a good number of you can get the capital as soon as what you expect. That's the reason. Fine. Yes. So stock split is splitting the share into 2 or 3 or 5 or 10 based on the thing, the value of the particular share will remain same. The number of shares alone will increase. Especially what is the objective of the share split is stock liquidity. Liquidity or more retail investors will be investing in that particular share, so that liquidity will be good enough in your particular. That's it. Thank you.